Hello traders, just want to share with you the head and shoulders pattern formation and how to trade it. There are a few ways you can do this, so let's explore and dive straight in. So this is the euro yen. This is currently happening as we speak. We've had a nice move down, so example 1 would be to enter on the failure of the right shoulder, or the formation of the right shoulder, which you can see a sharp decline there. This is a 1 hour chart. You would use your fibs, so if you don't know how to use fibs, we can do another tutorial on Fibonacci, but very powerful. Off the 76.4 that is my key level, the last fib level before we break up fully. So you can see perfectly bounce off the 76.4 to form the right shoulder. And so that's option 1, example 1, to get in and either intraday scalp it for a good maybe 40, 60 or 80 pips depending on this move, or look for the hold to complete the N shape. So this shape here coming all the way around to retest the low, which is a 2740 area, 2440 area, for a good 200 pip move. So really nice 200 pip move. That's the second example, second option of how to trade it. Third would be that you understand that we're in a head and shoulders formation. You can clearly see the head and shoulders formation set up. You take your trend line, you use the recent highs and the recent lows, and you're basically saying, okay, this needs to go up and test this area, and then this head and shoulders is void. If however it doesn't, and it just continues to make lower lows like it's doing here, in this case it doesn't even get anywhere near testing this, making lower highs each time here, so you can see it's very weak. You can look at the consolidation, the deceleration here, and then the break of the last swing low. So you would look for shorts here, it goes back up, look for shorts here as it comes in. So that's the third example to take it back down, again looking to complete the N shape. So you're looking for entries, so entries up here, here on the pullbacks here, or depending if you want to wait for the final break. Again, your stop losses, it's all about your risk management, so your stop losses would be considered somewhere above these levels each time. So nothing major in terms of risk to reward ratio, in terms of big stop losses, because at the end of the day you don't want to be putting your stop loss up above the head, because that's too much risk. It's a huge stop loss. For day trading, even swing trading, you want to try and get a sniper entry. The fourth and final, sorry, not the fourth and final, we've got 5 examples. The fourth example is the break. So it tested, bounced off here. This is the breakout, the famous breakout, which a lot of traders, retail traders, look for, but perhaps carries the highest risk, because you are getting in quite late in terms of entry, because you're basically saying you're looking for it to break this key support. And when we zoom right out and we look at this this support area, it's the bottom of the this head and shoulders formation. So we are looking at previous structure, got strong demand area to go back up, and as you can see it's tested it multiple times. So you basically are trying to get in at the bottom of this move. However, not to say that you can't do it, it just you just need to be patient. You just have to understand that you need to use the higher time frame still. So in this case, we're using a 4 hour and a 1 hour, and we're looking at the kind of volume that we're seeing, the bounce off here, and then you want to put your stop losses just above this initial pullback and say, okay, we'll give this a chance to break out, to break lower, to break down, because that at the end of the day the bigger picture is that if it does actually break and it does start to move, then you're looking for a decent sell-off all the way back down for quite a few generous 100 you know, 3, 4, 500 pip move. So it is about using the high time frame. So for intraday, 4 hour and 1 hour, wait for this pullback again, put the stop loss just above here. It's all price action. You can see lower highs being made, so each time you're entering short, where you can recognize that the head and shoulders formation is setting up or has set up, you know that the stop losses are considered just above each time these areas, these key pullbacks. So if you're an intraday trader, you may take 3, 4, 5, 6, 7, 8 trades, shorting and reshorting. If you're more of a swing trader, set and forget, you may just take 1 or 2 positions and just leave them to run and then just manage the stop loss. For me, I'm generally a day trader, so I'd be looking at these opportunities and taking these countless times. So maybe 2 or 3 times may have shorted this for some good pips, looking to catch the bigger move. So the fifth and final example is the one that's yet to play out, but I think you probably know this as well, guys. It's the one where we've broken out. Now we're waiting for the retest, if it in fact gives us the retest. So what do we mean by that? Well, everything kind of breaks out and does the whole move down, in this case trying to break to the downside. So where's it going? It wants to go down here, doesn't it? And it's going to find some support somewhere, perhaps at 124, which it did sort of bounce off there. So then what's it going to do? Is it going to go back up and retest this previous structure, which is now resistance? So previously it was support, major support, now it's resistance. So price may come back up and test it to around 124.40, and then depending what sort of price action we get, if we get this sort of price action consolidation or this kind of price action, you know, where it just consolidates, then you could put your stop just above and ride it all the way back down, and so a retest. So that's your fifth and final methods, if you like. So it is about understanding price action. You see that all 5 examples are pretty much talking about price action and how price respects certain highs, and how it, you know, how then certain key levels of support and resistance, and then you place your stops just above, in this case just above each time it pulls back. I hope that makes sense. I hope this video does help you a little bit. If you're unclear which setup to take, or if you miss the first setup, remember it's a never-ending buffet. So if you miss the right shoulder forming off the 76.4, we've got a 764 strategy that we use for this one. If you miss that one, you wait for a pullback. You can get in on the pullback using the fibs. There is another method where we just look for the second or third entry. If we miss that one, see that in this case there's 4 entries, possible entries, 1, 2, 3, 4, all making lower highs, as you can see. And so remember, it is a never-ending buffet. You never have to worry about missing out. This FOMO, fear of missing out, that people are constantly talking about. And you know, the markets are liquid, the market's always moving. So you can see I've just explained potential entries multiple times. And to be fair, if you're looking for one decent move, like I often am, you know, one decent trade of the week where I bag my profit for the week, then really the rest of the week is your own. You don't really need to do much else if you've made your percentage or your quota for the week. So remember that, guys. Remember that the markets are never ending. It's a never ending buffet. There's always opportunity to make money. And so yeah, if you need anything or you want to, you know, get involved, join our group, and you know, we'll discuss and share and help you find these setups and help you trade these setups as well. And it won't cost you a penny. It's all for free. Come join the revolution. Trade your way.